What's up, guys? So this video is going to be about how I think the year might end and how I guess 2023 and 2024 might look like. Um, so we'll start off with the CPI. We're still at 7%, and I think it was projected at 7.3, but because it came down to like 7.71, I think exactly was the print. But the market, it did rally a little bit. It came back down to reality. 7% is still high, and at the end of the day, man, the Fed's job is to control rates and to control the money supply. And, it doesn't take a rocket scientist to realize that we printed a few $1 trillion, over the last couple of years, when the vid first started to where we are now. And now you have all that money that's actually hitting, regular people now, right? Like regular things have gone up so much comparative to 36 months ago, 2019, right? One of the only ways to combat that, or one of the only tools that the Fed has to combat that, is to raise those rates and absolutely destroy demand. If things get too expensive, it actually destroys, the likelihood that me and you are going to buy it. Not because we don't want to, but we can't afford it, right? It doesn't make sense. And the real tricky part here is they got to get that money supply back down, man. Having that much money, that many dollars out there chasing all the same goods and services, it's not good for our economy. And the reality is I think that inflation is not on a decline. I really don't. And I think that if the numbers what we're thinking is going to happen is like it's at below to 7. So we're thinking, oh, then it's going to go to 6.5. Excuse me. Then it's going to go to 5, and then eventually it'll go down to the target rate that we want. But not, I don't really see that happening without a reset, right? And essentially, a reset is a recession. I just don't see how an economy could get back on track and to be sensible to people without there being a contraction in the economy. So there's no doubt in my mind that we're going to have a recession, actual recession, that people are going to have to admit that it is a recession next year. And I do not see the Fed slowing down those rate hikes because, it's like everything in life. You look at short-term gain and then, long-term consequence, right? What would the Fed have to gain to stop raising rates right now or to cut rates? It would be a short-term rally, but that doesn't solve the problems that are not just in the financial economy, right? Because Wall Street plays by, it's different versus me and you, the real economy. We're going to be affected this time, if we do not get inflation in check. Because regular people can't afford to have their living cost, go up by, 7%, every year. Especially when an average person's wages do not come anywhere near that. You know what I mean? Like, or the increase in wages don't come near that. And, every business is just like, it's a pie, and some pies are bigger, some pies are smaller. And for a business owner, you're looking at this circular pie and you're taking slices out like, okay, this is my fixed cost. Here's my rent. Here's my utilities. Here's money I need for expansion. Oh, here's my labor. And then here's my profit, right? Like every business owner, there's only, so much of your profit of the pie that you could give away to your labor or to other expenses before you look around. You're like, bro, I'm going negative and this is not working for me, right? With that being said, the reason why I'm saying that is wages aren't going to dramatically increase overnight to catch up with the rate of inflation that we've reached. It needs to get to a certain level of stability, right, for a business to then be able to, bump those wages up. And especially at the same time when you have interest rates going up, right? Because a lot of people have commercial loans, right? If you're running, a pizza parlor, you're running whatever, unless you went through the SBA and you got a 30-year fixed on something, mostly you went to a local bank or one of the big four or whatever, and, you still have a line of credit or whatever mortgage you have, that's going to be adjusted coming up here. Maybe if it's not right now, you're lucky and it's not going to be 4 or 5 years, but every year, every month, there are people that are renewing their loans, right, or refinancing their loans. And when they see that their rates are 7, 8% and that cost goes up out of that pie, how much more can they pass to their workers? Then if it trickles down to the workers, if the workers can't even keep up to actually be able to live a sustainable life, because, dude, you can only work so hard. You can only work so many hours and you can only earn so many dollars, right? That's why inflation's dangerous. If you're starting to see the bigger picture here. So, yeah, short term, if rates go a lot higher, people's jobs might be, or they will be crushed. The economy will be slowed down, but the money supply comes down, right? You'll actually, when you see a deflationary period, you'll actually see prices come down. Things will come to reality. Once that happens, that's when we could, cut rates. We could get things going again. But the dangerous thing that could happen right now is the Fed gets some type of political pressure, either through the Biden administration. And this is not to get political, because if Trump was in office, he'd be doing the same thing, yelling to keep those rates low. Because in the short term, everything looks great. But the scariest thing is we need to pay attention to is if that inflation, that CPI number, which, by the way, we know is fucking bullshit, bro. There's no way it's 7%, bro. Let's be real. We live in the real world. It's fucking Taco Bell prices are up 20%. It's 20% more expensive for me to even go eat Taco Bell than it was 2 years ago. So don't give me that real inflation 7%. It's not. It's a lot higher. But we got to go by whatever is the formula being stated, right? My biggest fear would be in the next 3 months, God forbid, but that inflation, since it's been on a downward projection, actually jumps, right? It's still lagging. Like it's not gone away. And if the Fed still isn't increasing those rates to combat it, if they stop or they slow, then what's going to happen? It's going to be a lot worse for everybody, including business owners, if everything that we want to do in our life next year and all of 2023 gets 10% more expensive. Because I can promise you, you're not going to get a 10% raise in whatever job it is that you're working, right? Some of us will. Some of you guys will. Sure, I'm sure of it. But I'm talking about the vast majority of people here. That's not going to happen. It's going to slip us back even more. And once inflation's out of the box, man, you're talking about like the Paul Volcker days in the 80s. So the only other way to bring inflation down is you would have to match rates at inflation and actually go a bit above it. So if inflation goes to 7, 8%, you're going to have to get the Federal Reserve, the Fed rate, right? You call it the discount rate, whatever their rate of borrowing needs to be above whatever the inflation is if it were to get crazy out of hand. And then for regular people like us that are going to go try to buy a home or start a business, do whatever, we're going to have to pay probably 6%, 5 or 6% above whatever that Fed rate is. So if inflation's, let's say, goes back to 8, that means we're talking about, in a horrible scenario, paying 13, 14%, 12%, like in that ballpark next year to go buy a home, to go buy a business, to go refinance our businesses. That is the absolute worst thing that could happen, right? And I think the Fed knows that. So with that in the back of their mind, they're like, well, we'd rather get this discount rate to 7, 8%, or at least 6% now, right? And see if we could get inflation, from going from 7 to 6, and then it could drop off. Right, but if that CPI number in the next 2 reports or whatever jumps back up, it is not going to be good. And it's just the sheer amount of money that's out there. I mean, we're talking about trillion, what was it, 25 or 30% of the U.S. money supply since the day this country was founded. 25 to 30% of that money was printed in the last 2 years during the pandemic, right? It doesn't take a mathematical genius to realize that money's going to start moving around and going somewhere, right? It's like if you were playing Monopoly and instead of passing go, you got $200, you got $1,000, right? It just makes everything else more expensive. And if you play Monopoly the way I do, which is not just, hey, you land on it, you get to buy it. It's like, hey, you land on it and you get to bid, you know what I mean, for the property, right? So it gets competitive. It's all those dollars are chasing the same amount of assets. All those dollars are chasing the same rental property. All those dollars are chasing the same stock. So just once again, out of that stock, that ownership that you got of whatever you got, The pie is only so big to go around for you as an investor to make, or you know what I mean? So it's the same problem. The problem is we have too much money in the system. And one of the best ways to bring that money down is going to be to raise those rates. It is going to be to destroy demand, and then to bring it, bring that down to a level where we could actually have a real economy and not something that just like, oh, you are making money in the market just because, not because the business is actually increasing or doing well, but just because there's more people willing to pile on behind you, so your shares go up. That it makes no sense. I don't know, man. I always like to think, bigger picture, down the road, right? I'm not really more of like a short-term guy, like, hey, let's do anything short-term, because I'm like, fuck that, man. If I'm putting in the time, energy, and effort into something, I want to do something that's going to pay me for the continued amount of time, right? I'm not going to do something that, hey, I buy a little flip, I make 100K, then I'm good. It's like, nah, I'd rather use that time, energy, and effort to buy a rental that I could keep consistent, and then I could sustain my life off of that. Same thing with stocks. Like, it's cool to, like, mess around and do spreads, and we make money off of it, sure, and sometimes we lose, but real investing and having realness in your life is having something that is consistent. It's always been that. You need to have consistency in as many parts of your life as you can to actually be able to enjoy your life, because that's what removes stress. That's what removes things. Because if every month you're making an X amount of dollars, every month that your house is going to be there, your car payments are going to be on time, it's a lot of that stress gets alleviated. If you're playing this game where, like, what you're holding and what you're doing in life, you don't know if tomorrow or next month you're going to get paid $10,000 and this month you're going to get paid $5,000. How can you sustain a life like that? Right? And that's the same way that's why I invest the way I invest, is like, I'm always looking for consistency. If you see me today making 10 grand a month or 20 grand a month or 30 grand a month, you bet your ass next month I'm going to make the same, or very, very close to it. You're not going to see sporadic jumps, right? But that's just how I choose to live. That's how I choose to invest. That's how I see the world. I'm more of a consistent type of guy, right? And, in the world we're in today, it is very inconsistent. Like, I mean, you're still seeing stuff on Zillow and Redfin and all these, these apps where people are still trying to sell stuff to you at a 4 cap, and it's like, buddy, I can't even get a loan for a less than 7% is the best you could do right now, but on average 8%. So I'm supposed to take a loan for 8%, and I'm only supposed to make 4%. So who's going to cover that spread? It doesn't make sense, and that's because people are still delusional in what they hold. They still think their shit is worth here when it really should be worth here, right? And a lot of people are still holding out hope, thinking, "Oh, the Fed's going to pivot; it's going to turn around. So if I could just withstand this year, I'll be fine. I'll be able to refi. I'll be able to do this. I'll be able to do that." I don't think any of that's going to happen. I think you got to look at it from the Fed's perspective. The Fed can't afford to let inflation get out of control, and even 7% is too high. And like I said, I think the biggest fear that could happen in 2023 is going to be if inflation goes back up to the 8s. Right, then you're going to have real rate hikes really quicker, way quicker than 0.75, probably 1% at a time, right? I fully expect in 2023 there be a recession. I don't think there's going to be a soft landing. There just can't be. We've done too many things and messed up too many parts and broken too many parts of the system that have shown themselves already. Like, think about all the logistics supply chains and just the supply chains in general that have broken down because of the pandemic, right? And all those things are coming online. Now we're finally back to living normal lives and doing normal things. But now everybody is dealing with, overpaying for everything during that time, because all we did was print money and give it to people that stayed home. And that's not really like a logical, thing to do. We should have never probably done that. But that's not a conversation right now. Now we're dealing with what the consequences are. So my projections for 2023, we definitely see a recession. We definitely see higher rates than we see now, and they're going to be sustained higher for longer, and you're going to get deals. You're going to get decent deals pop up. You just have to be patient. Some of the hardest things to do as being an investor is actually waiting, and it sucks because most guys and gals that are go-getters and doers and want to get like me, I'm like, I'd pull my hair out when I'm not having something to do. My brain's always like go, 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 but investing requires patience. And you just got to be patient. It sucks, and it's honestly the hardest thing to do, but eventually something falls in front of you that's amazing. You don't have to buy every stock. You don't have to buy every rental property. You wait for the ones that make sense for you. And that's my projection for 2023. And I could be wrong, But it's just the way I see things. I only see rates going higher, and I think the Fed's going to have to go higher. Well, if you guys like the video, let me know. Please like and share. It helps me grow the page. And check out the Discord, man. It's $5 a month, but totally worth it, in my opinion. And, it helps support me. Thanks.